Good evening. I'm Marianne Brownlow. Welcome to Borders. This past week, probably like many of you, I had my income tax done, and afterwards, like most years, I felt like committing seppuku in front of the IRS. And then I perused The Cheating of America, and I felt like seppuku was possibly too mild a response. We're very pleased this evening to have as our guests Charles Lewis and Bill Allison. They are here to discuss their new book, The Cheating of America: How Tax Avoidance and Evasion by the Super Rich are costing the country billions and what you can do about it. That pretty well sums up the book, but I will say it is an incisive expose that fingers the fat cats and the permissive system that allows for their indiscretions. Charles Lewis is the founder and executive director of the Center for Public Integrity, which is a nonpartisan nonprofit that focuses on ethics and public service issues. Prior to that, he was an investigative reporter for ABC and CBS News and a producer for 60 Minutes. Bill Allison is a former researcher for the Philadelphia Inquirer, and he is the senior editor at the Center for Public Integrity. Please join me in welcoming Charles Lewis and Bill Allison.
Well, it's a great pleasure to be here, and Marianne, thank you. This is a real pleasure. I thought I would talk a little bit about the Center for Public Integrity briefly. This was a work that took 3 years and a dozen people digging through U.S. tax court records, which I wouldn't necessarily recommend for the faint of heart. And the idea was to do what we have done in over 100 reports in the last 10 years, look at what's going on in our democracy and what's really happening and who benefits and who doesn't benefit and how the system works, basically. And I mean, we've never done anything about taxes. We don't have an agenda about taxes. So the Center for Public Integrity was started in 1990. It's a nonpartisan, nonprofit research organization that does investigative reporting, and I'm proud to announce today that Investigative Reporters and Editors has given us the National Award for Online Journalism for last year, and our book, The Buying of the President 2000, has just been named a finalist for Best Book in the U.S., which is the 5th straight year we've had a book as a finalist. So we do investigative reports and books that a lot of people in Washington would prefer that we never write, and we are nonpartisan. We alienate both parties equally, and we generally investigate and go into records that people generally don't look at, including journalists. And so that's the center. The thing that most shocked me about the book, in just some general broad strokes, first of all, I understood that we would find really wealthy folks and corporations that didn't pay taxes. I sort of had a hunch that that might happen based on our other work over the years. What I was startled by was how bad a problem it is. There are thousands of individuals and thousands of corporations that don't pay any taxes in this country. 1 out of every 6 corporations with 250 million assets or more pay 0 taxes every year in this country. We found that the biggest shock was not just the number of people, and by the way, we name names in this book. We tell you who they are and what they've been up to. This is all based on records that they would hope that you never see. But we then wanted to see, what's the government doing about this? What's the IRS doing about this, the Internal Revenue Service? Well, it turns out not much. We found that the kinder, gentler IRS that has been created in light of a lot of hearings and new laws and an independent commission that oversees them and things like that in the last couple of years. At the same time, over the last decade, we have gutted enforcement by the IRS. So what am I talking about? Well, if you owe more than $10 million to the IRS will take 10 or 20 years to come after you if they do at all, and on average they recover 17 cents on the dollar. folks who have $10 million know this, and they have lawyers and accountants who help them do it. And a lot of the book is showing how this works. How badly has the IRS been gutted? And, I'm not expecting anyone to, break into tears over the IRS here. No one likes the IRS or paying taxes. I understand that. But the enforcement staff of the IRS has been cut by 1/3. Prosecutions are down, are 1/2 what they were 20 years ago. Asset seizures are roughly 1/10 what they were 10 years ago. They went from 10,000 to about 150, roughly. It's worse than that, actually. It's much, much worse. And so what it means is that the IRS is outgunned. They don't really know how to deal with this problem. And we had an IRS lawyer who, for obvious reasons, asked to be not have us mention his name. He said, if you go through thousands and thousands of pages and your court case takes years and years and years, why do you think we go after the little guys? They can't fight back, quote unquote. And that's what they do. And so this is a book about folks who have their own set of laws that they abide by that are different than most Americans. Most Americans, if they get a notice about being audited, quake in their boots and reach for the checkbook. And they don't want to get in trouble. I mean, and you're terrified, basically. We had tax scam artists and accountants and lawyers tell us that when you hear from the IRS about how much you owe, that's basically just a recommendation. That you should take it as the first offer in a negotiation. And that is how a lot of wealthy folks trying to avoid and evade taxes handle the tax issue. They have experts who will drag it out for a period of years, knowing that the longer it drags out, the less chance that anyone will come after them. And this book ranges from the legal, most of what the Center has written about in the last 10 years has been what I call legal corruption, things that seem like they ought to be illegal, but for some reason they aren't. Everyone does tax avoidance at this time of year to some extent. We don't want to get hosed completely. We try to claim every deduction. And then there's evasion, which is out and out illegal, which I'll get to in a minute. And then there's avoidance. The sort of the gray area between those two worlds. My personal favorite part of the book was, I don't know how I ended up with this job, but my job was to go confront the bad guys. And of course, most of them wouldn't even, open their front door or even let you go see past their gate, the large gate. I did go to Belize, to the jungle of Belize, to find a fellow who had fled the country for tax evasion. He was a pillar of his community, 62 years old, a government contractor with security clearances, and he decided one day, after the IRS and the feds found out that he had been stashing money in Mexico, he decided that he didn't want to serve jail time and he didn't want to be indicted, and so he fled. And he and his third wife, 30 years younger than him, fled first to Acapulco, then to Paris, then to Greece, then to Paraguay, then other parts of South America, then to Vancouver, and then they ended up in Belize. And there is no extradition treaty with Belize. He's there for good. He's very happy. He has a large house with a beautiful orange tile roof and a big sort of palatial estate. He has a resort, and so I checked myself into the resort as a guest. I don't think they were happy to see me necessarily. In fact, when I drove up, it was a scene out of The Boys from Brazil. It was raining and the windshield wiper is going, and I can barely see where I'm supposed to drive. And the only way to get to this resort is across the river in a little boat. And behind this resort is 200 miles of jungle of Guatemala. And I haven't been to any of these places before. I'm completely out of my element. And so I pull into a parking lot, and I see this guy, look like Jed the Sailor, vaguely waving, and I thought, I wonder who that is. And I parked the car, and just as I turn, he's at the door. And it was Joe Ross, whose alias is J. Picon, P-I-C-O-N. And he said, I must be pretty damn important for you to come halfway around the world to see me. And I said, oh, you're very important. And for the next 4 days, I talked to him for 25 hours. He would not go on the record, but he basically did tell me his life story. And the headline is, he said, I won. And he said, you know, they can't touch me. I've got 6 or 8 law firms on retainer. If anyone's coming near me, I'll know about it. I've put all my assets into companies. I failed to mention there are 3 million corporations today that no one knows who owns them. There's $3 trillion in assets offshore. The IRS has no idea what to do about it. There's a whole subtext here that's in our book about globalization, the ability of countries, including the U.S., to track the money. That's a whole nother subject. But he gets CNN every day, he gets the New York Times flown in every day. He has 25 people waiting on him hand and foot, making $6 a day, and including gourmet cooks. And he lives like a king, and he did win. And the question is, we opened the book, and I'll turn it over to Bill. We opened the book with Leona Helmsley. Who can forget Leona Helmsley? And the famous comment at the Dunellen Mansion estate up in Greenwich, Connecticut, when her head housekeeper said to her one day, you must pay a lot in taxes. And she looked at her with a curious look and said, pay taxes? We don't pay taxes. Only the little people pay taxes. So the question is, how many Leona Helmsleys are there out there? How many Mark Riches are there out there? The only difference between Leona Helmsley and Mark Rich is Leona Helmsley went to prison. That's about the only difference. Anyway, so this is a book that names names. It tells you who these people are. It tells you how they did what they did. It tells you how the feds handled it or didn't handle it. And so anyway, if you want to get into that, now I'm afraid that there will be some people out there that will read this book and try to avoid paying their taxes. I realize that'll be some people's motive, and I suspect that you probably could learn a few things that way too. I hate to admit it. Don't tell anybody. So anyway, I'll turn things over to Bill, and then we'll do questions, which are always more fun than yammering away here. So.
Okay, thank you. I was thinking when Chuck was talking about the evasion and avoidance, I was. It's very rare to get an IRS employee who's willing to talk to you. They're often terrified. Well, first of all, there's a rule that they cannot reveal taxpayer information under penalty of law. It's kind of the IRS death penalty. And beyond that, they're afraid to talk to reporters often because they're afraid that they're going to be accused of incompetence, that you're calling them to attack them, that they're going to be called a jackbooted thug or this kind of thing. So when you do find the rare IRS agent who will discuss things with you off the record usually, it's a gold mine. And I was thinking of one instance when I was talking to somebody who had been tracking a fairly wealthy real estate developer for years and years and had been involved in any number of tax court battles with him. And this guy actually lived in a relatively small community. And one day, the IRS agent picks up a newspaper from that local community and turns to a page and sees on one page a story about a 7-Eleven being held up for, $50 or $60, and the guy being caught, and there being a weapons charge and the robbery charge, and this was a big to-do in this small town. And on the opposite page is a picture of the real estate developer opening up a shopping mall, and he's thinking, here's a guy on the right who's evaded millions and millions of dollars in taxes, and he can get away with it. And here's a poor sap on the left who admittedly has done something illegal, but he's going to go to jail for several years. And the kind of the disjunction between the two really struck the IRS agent as being, the classic example of the difference between what you can get away with and what you can't in this society, and the advantages of being well-heeled. And among those advantages is that tax cases, complicated ones, are generally prosecuted in civil court or end up in civil court, not in criminal court. One of the reasons is that when you do have the kinds of civil fraud or the kinds of fraud involved in a tax case, it's very difficult to prove it. You have, again, the thousands of records, the thousands of documents, the foreign corporations, a 20 or 30-step process to go through. And for IRS agents to track this and prove it, or the Justice Department to prove it in a court of law, is exceedingly difficult. What jury is going to want to spend 10 years on a case I mean, the difficulties are almost insurmountable. In some cases, though, there's very simple tricks. One of the things in the book that we found, and it always fascinated us how the variations and the ingenuity of tax avoiders and evaders and what they did to get around certain requirements. The IRS has a place in the tax form where you have to report if you're the beneficiary of a foreign trust. And one of the ways around this is to simply list somebody else as the beneficiary of a foreign trust. We had a Forbes 400 member who had set up a trust in the Channel Islands where he did this and named various charitable institutions, schools, hospitals, that kind of thing as the beneficiaries of his offshore trusts. And he was the one who got all the income from it. I mean, hundreds of thousands of dollars each year. So that was a neat trick to get around reporting requirements. In another case, a pair of movie producers who had hit movies in the 1980s, what they made hundreds of millions of dollars off of, that starred the likes of Schwarzenegger and Stallone. These gentlemen set up offshore subsidiaries for their movie company, funneled profits through 5 or 6 different companies offshore. Eventually, all the money wound up in foreign trusts offshore. The IRS tracked it for years and years, finally caught up with them, and their argument is, well, the trusts are the ones who earn the income. The trusts are citizens of foreign countries. The corporations are foreign corporations. So even though these are American movies that, all the costs were associated with America, the income is foreign and we don't owe any taxes on it. The offshore world is, the IRS really doesn't have the resources to go after it and to track all of these things. And another thing that intrigued us, though, is how much you can get away with in the United States and how the tax code itself is so full of loopholes, and through perfectly legal means, people who have incomes, to cite one example, there was a gentleman who went from being not a member of the Forbes 400 to being a member of the Forbes 400 in 1 year. He boosted his assets that much, his net worth. He did it by taking out a $100 million loan from his company to buy a bank. And yet he reported negative income of $2 million. He didn't make any money that year. He lost money. And yet he wound up on the Forbes 400 where he's remained ever since, and he's worth $1.2 billion. He did it through a very complicated, again, series of transactions involving distressed oil and gas companies in Oklahoma that had large operating losses for year after year after year. They'd go bankrupt. The IRS, and this is one of the things, anytime anybody tries to close a loophole, there's always another loophole you can use to get around it. With the net operating losses, the IRS said, no, you can't buy companies just for their net operating losses, which is this huge tax write-off that you can take up to 15 years. However, if you are one of the creditors of the company, you can essentially take over that company because they owe you the money, and then you can realize their net operating losses. Well, what this individual did was he basically bought the debt. He bought out some of the creditors and took over the debt, and then he was able to continue buying up these companies. And the write-offs, I think he paid $10 million for the company, and the write-off was $140 million. So, I mean, it's quite a bargain. It's like a get-out-of-taxes free card in a Monopoly game. And, and this is somebody who's buying up large portions of a state economy and able to do this. Let me think other examples of this that we found. We found the 86 Tax Act was supposed to wipe out a lot of corporate shelters, individual tax shelters. The corporate shelters were largely left alone. A lot of the individual shelters were wiped out, and some people converted all of those losses they had from regular shelters to net operating loss shelters, or net operating losses. And another thing that we found, which is one of the more astonishing things, I think, in 86, when we had the terrible shelter problem that the 86 Tax Act was supposed to take care of, one in 400 people with incomes over $200,000 paid less than 5% of their income in taxes. In 1996, which was the most recent year the IRS released statistics, it was 1 in 200. So the problem was twice as bad. The number of people who can get away with this, filers, individuals, and joint returns. And we found people who, there was a filing in a tax court case where one of the IRS briefs said something to the effect that, yes, we've been auditing these taxpayers for over 30 years. This is the last audit, or this is the last time that we're going to go after them, because, they had been involved in this case year after year for 30-odd years against the same family who owned, high-tech telecommunications company, a luxury hotel in Boulder, Colorado, drove around in luxury automobiles with license plates that say XS on them, and vanity plates, and yet year after year after year ended up owing no tax liability. It was just amazing how they could get away with it. And it was funny, the few times that we did get some of these people on the phone, and we would identify ourselves and say what we're doing and explain the book. And my favorite reaction was one person who had obviously checked us out, after he had gotten the initial message, and told me that he resented the fact that we were muckrakers calling. And then, I think that one of the things that there's kind of a sense in the country, and we talk to average taxpayers as well. We talked to a woman who, self-employed consultant who, never made much money in her life, calls the IRS up for help. She had to take money out of an IRA, calls them up for help, says, please tell me, how do I declare this income? I just want to be sure that I'm doing this right. IRS tip line gives her the wrong information. She goes through a miserable 2-year battle with the IRS. At one point, agents threatened to take her house away. This is one of the things we found about the IRS is that, they do certain things very, very well. Other things they don't do so well. Among the things they don't do so well are going after sophisticated taxpayers and tax avoiders with these complicated schemes. And then the second thing they don't seem to do very well is relate well to the public. And sometimes they can really be their own worst enemy. In her experience, there really was only one person who was terrible. Most people were either uninformed and couldn't help her and just frustrating, or realized that this thing had spun way out of control and tried to get her the proper counsel or advice. But because of statutes and different deadlines and different limitations, it would be too late for her to file such and such type of appeal or such and such settlement offer. And so for her, it was very frustrating. And then you have, the agent who just wants to, break people's kneecaps almost and threaten and say that, not only do you have this tax debt, it's going up every single day and you're going to owe more and more money. It's funny that the well-heeled taxpayers never seem to have those kind of experiences with IRS agents, with the heavy-handed people, at least as far as they were willing to tell us. So I probably shouldn't generalize too much that way. But getting back to this situation, so you have that kind of person and their experience with the IRS, and then you have the moderately to well-to-do people who hear these stories about, the wealthy who get away with this, and they turn to the internet hucksters and the people who promise you pay no income taxes, live tax-free. We'll set up, there's all kinds of different, the rabbi trust, the offshore trust, the offshore bank accounts, and there's just a plethora of sites and thousands of people offering these scams. And and we one of the stories we tell in the book is an upper middle class family that, with their own business, that decided, well, maybe this is for us. Maybe we shouldn't be saps anymore. Maybe we should try out one of these schemes. And it turned out they fell into the hands of somebody who's a tax protester, who, among other things, when they got their first notice from the IRS after, these were people who would never steal, would never think of not paying a parking ticket, who had never been in any kind of trouble at all with the law or with anything else, and felt that taxes maybe for them should be optional. And here are all these people saying that don't be a sap, don't pay your taxes, you know, set this up, this is perfectly legal, this is perfectly legitimate. So they fall into this trap, and they pay these guys $10,000 to set up these trusts for them, and then, you know, so after years of paying, you know, in the tens of thousands of dollars in taxes, they pay zero. Red flag goes up at the IRS. They send a polite, you know, notice of deficiency saying that, you know, on the basis of this, that, and the other thing, we think that you probably owe X amount in taxes. They call the people who had set up the trust for them, who give them advice like, if the IRS sends you a registered letter and you don't sign for it, then the IRS can't audit you or can't proceed with their investigation. Don't answer IRS phone calls. Eventually they get word from the IRS that they're going to be criminally liable for tax fraud, at which point they got a reliable, you know, reputable attorney to represent them. And after paying what they owed, you know, we're off the hook, and I think a little bit wiser about it. And then on the flip side of that, you have people doing the same thing. One of the stories we tell in the book is about Merrill Lynch, the brokerage firm, and some people there, a very intelligent derivatives trader, marketer, somebody who set up complicated currency hedging transactions that I'm not even sure that after having read about them in these tax court transcripts for months and months and months, that I have the vaguest understanding of how they exactly work. But he hires a former IRS employee, somebody in the chief counsel's office who's familiar with corporate taxes, and they sit down and say, gee, you know, on paper, if we do this and we set this up like this and we do this, and they draw this thing out on boxes, and I kind of imagine them doing it on a cocktail napkin, although I think they actually did it on computer paper or on a computer screen. But, you know, if we set this up like this and we market it to such and such corporations, ones with large capital gains, we can offset those capital gains, make it look like they have huge losses, and they can get out of there paying their taxes. And the question is, what is the difference between them and the sham operators, the internet guys? And of the two, it's the guy running the bogus internet operation, you know, who admittedly is guilty of perpetrating a fraud. He's asking for $10,000 for something that he can't deliver. But in the same way, these, you know, some of these corporate tax, and they never have to worry about any kind of criminal liability. They never have to worry. It's always handled through civil means. And yet the distinction between the two, where in both cases you have something that is only valid on paper and has no economic substance under, at least that's what the tax court ruled, that's what an appellate court ruled, and the case was dead. And, you know, the corporation pays the taxes owed and goes merrily about its business. So I think that was one of the surprising differences we found.
One quick thing I forgot to mention, which I should have said, besides the fact that Bill was miraculous in this project, along with a team of folks that are mentioned in the book and on our website, is the size of the problem. We're talking about $200 billion a year that we have lost. It's euphemistically described by the IRS as the tax gap, money they're not collecting that they ought to be collecting. Now, that's tax monies from all income brackets, not just the wealthy. But that's $2 trillion over 10 years, which is $1,600 a person, which sounds awfully familiar. It's bigger than the Bush tax cut. You know, if you would just collect our taxes from everyone, we would pay a lot less in taxes. So the size of this problem is not a small issue. This is not just a few derelict folks out there. This is a significant problem, and it's getting worse. And I think that's one of the headlines that we got from this thing. The other thing we haven't talked about, I can't resist mentioning, is one of the reasons we did this project is I was completely fascinated about the so-called Benedict Arnold billionaires. There's a number of billionaires who decided that in order to not pay taxes, they would renounce their citizenship. And so we had the heir to the Campbell Soup fortune moving to Ireland, and we had the head of Allied Signal, CEO, leave, former CEO, I guess, by that point. He left La Jolla, California, and he moved to to the Bahamas, to an exclusive gated community known as Lyford Key, and I went and knocked on his door and tried to meet with him, but he wasn't interested in talking to me. But these folks, some of them actually tried to get legislation passed, which is what caught our interest. They hired a former member of Congress, of course, and they drafted special legislation so that they could expatriate, they could renounce their citizenship and not owe any taxes, but then they could still live in the U.S., basically. Fortunately, that legislation didn't make it, and in fact, Congress enacted a law to prevent folks from doing this kind of thing, except they don't enforce the law. No, people can come and go as much as they want. The fellow, the Allied Signal CEO, today has a house in Aspen, Colorado, and he comes and goes and he actually, God, these stories. He actually created a center for entrepreneurialism at the University of Maryland in his name, and he visits the University of Maryland campus frequently. This is a guy who basically left the country and doesn't pay taxes here anymore, but he talks about what a wonderful experience he had as a businessman in the U.S. I mean, the story is full of audacious chutzpah, I mean, like you have never seen before, and they do it all with a straight face. So anyway, I don't know if we should do questions or we could talk for hours, but sure.
What can we do about it?
It's a great question. The two things, the most consumer-oriented thing is, if you hear a deal that sounds too good to be true, there's a fairly good chance it is too good to be true. There is an awful lot of internet scam type stuff going on here, and you should be very, even though we've just presented a scenario that everyone gets away with it and the IRS doesn't enforce it. I don't know if you're like me, if the one time in my life I would attempt something like that, you get caught. So, but the IRS, you know, just, and I'm sure that we'll all be audited at this point anyway, but basically, you know, if you're poor or middle class, you're more likely to be audited, frankly, than if you have all these fancy offshore trusts and shelters. And there are statistics that bear out what I just said. So good luck trying to do that. So one thing is to be the old buyer beware, consumer beware, taxpayer beware. The other issue is a larger issue. And, you know, politicians pander to the public on every subject imaginable. One of the things they do is about taxes, and we don't take positions on legislation. We wrote this book when George Bush was still the governor of Texas. We had no idea what was going to happen with the election. This is really case studies of how people evade and avoid their taxes. But there is an issue here where we're not enforcing the law. For all people. And we talk about it. This is not a discussion. You didn't hear Gore or Bush talk about this in the presidential campaign. You don't hear anyone on Capitol Hill wringing their hands about how we've gutted the enforcement staff by a third and wealthy Americans don't pay very much in taxes these days, and thousands of them are not paying any taxes. You're not hearing any of this discussion. It's simply not on the agenda. That's a really interesting issue. And as citizens, I think one useful thing of the Cheating of America is to tell the American people that you better think a little more closely about the whole tax issue, because there's a little bit of a game going on here where we don't really discuss not enforcing the tax laws. We just kill the agency gradually over a period of years, and we gut the employees by a third over 20 years, while the number of taxpayers has risen by a third, and no one discusses it. It's all done in that wonderful, quiet, nuanced, sophisticated Washington way where no one discusses it, and then you wake up and you see the numbers, and that's the message is there's more going on about your taxes than you realized. And I think as citizens, we need to know that and need to be a little bit more informed. So there's a personal message here, and there's a societal democracy about who pays the freight in our culture, who benefits, and how fair is it all. And I have to say that is an element you come away with scratching your head. Other questions? Yeah.
So would it benefit the public if we went to sort of a flat tax structure or consumer-based tax in terms of, you know, people stealing and basically finding loopholes to get out of paying taxes?
For those who didn't hear the question, should we go to a flat tax or some sort of consumer tax? There have been discussions about everything from a national sales tax to a flat tax. we don't take positions on taxes or what the best tax is. I mean, the purpose of the book was really to expose all these people and what they're up to. And if we tell you a precise thing, then everyone will say this book is a brief, that it's our agenda is to bring about this kind of tax or that kind of tax. But I will mention a quick story. Back in 1996, Steve Forbes, when he was running for president, was talking about the flat tax. And being the pain in the neck that we are at the Center for Public Integrity, we decided it would be interesting to talk to a CPA about how much a flat tax would affect Steve Forbes. And so we gave all of his financial information to a CPA, and we found that the flat tax would cut Steve's taxes in half. And so I'm not an economist and I'm not a tax expert, even despite this experience, but I'm a little skeptical about the flat tax for that reason.
One other thing about the flat tax is that a lot of the things we found in doing the book, I mean, the Internal Revenue Code, we called the IRS, said how many pages are in it, and the guy laughed and said it's a ridiculous question. There is no definitive edition of the code. You know, we talk about having a rule of law and transparency and everybody knowing what they're supposed to do, and there's not even a definitive edition of the tax code. But it is about, in some editions, 17,000 pages, and most of that is dealing with defining. I mean, there's an awful lot in there, but a lot of it is defining income, and nobody, you know, what is income? If you know, we treat it in so many different ways. Stock options aren't treated the same way as salary, which aren't treated the same way as deferred compensation, which are not treated the same way as dividends, which aren't treated the same way as. I mean, the list is virtually endless. And in part, that's a reflection of how complicated as a society we've become. But I think with the flat tax, I don't see how it's any simpler if you still have to define what income is. And you know, one of the, and I don't know that it necessarily ends cheating if somebody can convert all of their income to options or assets or, you know, things that the corporation will pass to them value in that way. You know, I mean, I think all of a sudden you'd have a lot of people with no salary and an awful lot of so, and with the national sales tax, I mean, the only thing that I came across an article somewhere where somebody pointed out that, I mean, if you think if you think about the way Washington works and with lobbying and things like that, so we're going to pass a national sales tax. Suddenly you've got the dairy producers saying, well, we can't have a tax on milk. It's for the children. I mean, bones and teeth. And the next thing, you know, the cereal manufacturers come along and say, yeah, but, you know, they've got to have something to pour the milk on. Why are we taxing cereal? And before you know it, you've got, you know, the cigarette manufacturers, the distillers, you know, and everybody else saying, well, our product should be exempt too. And so you'd end up, I mean, you know, what kind of tax base you'd end up with is, you know, so there are problems with all of the, I mean, this is why we have a 17,000-page long tax code, because it's so hard to come up with a perfect system. But I think there's a quote in the book by Abraham Lincoln, which is that, and I'm going to terribly paraphrase it, but he says more or less that if we wait until we come up with a perfect system whereby everybody will pay exactly according to his means, we'll never tax anyone at all. And, you know, that's kind of the nature of the beast. And you know, I guess we have to do the best we can with it.
I mean, one of the frustrations is that those 17,000 pages are loaded with thousands of pages of special deals for special folks in Washington. And if you have, you know, millions of dollars, you have not one law firm, but 3 or 4 of them. And you layer in special deals for yourself, and you have a different set of lawyers helping you every year not pay taxes after you've done your own loophole. And so when you add that all up, certain folks are afforded certain benefits from the tax code and others aren't. And it may be entirely legal. It may be avoidance because you helped write the law and you then helped exploit that law. But the average citizen doesn't have a clue what that is, and they don't want to spend $300 an hour or $500 an hour or more finding out all that stuff. And so it's a tricky mess. Which is the other thing the pervasiveness. One idea we thought about calling this book "The Millionaire Next Door Might Be a Tax Cheat" is the extraordinary extent to which there are thousands of folks, and that's what most amazed me. This is not one or two rogue characters out there, and that still is the most stunning thing to me, is the extent of it. Other questions? Yeah.
How'd you decide which sort of the thousands to focus on in the book?
Sure. The question was, how did we decide which folks to focus on? Bill, do you want to take a crack at that? We had weekly meetings for 3 years. That's one issue. But why don't you take it from there about how
To begin with, you begin with a very limited set of people, because it's basically people who, for the most part, had cases in U.S. tax court, where they had gone through and the records were available. I mean, because tax returns are secret unless you have somebody, and I guess sometimes you can get them in divorce cases. We weren't as comfortable with that because, a lot of times those records are sealed. So, I mean, that's kind of hit or miss. And so we decided to focus on tax court. And what we basically looked for was, boy, this is the fascinating process review. We'd start with statistics of income, which is the IRS, tells you how much is collected in taxes and who's paying what and what deductions are used, and et cetera, et cetera. And then we looked through tax court cases looking for examples of specific instances where people were using these kind of holes in the revenue net. And so that was an awful lot of the cases, and we looked for the ones that were statistically significant, and then we picked a few that were just kind of outrageous, like the Ross case, I think, as an example. I mean, we knew that the IRS had I forget how many fugitives, about 1,000 fugitives that they track, and Ross was one of them. He was on the list, and I guess we were thinking of doing Mark Rich, but at the time we felt that he had too much notoriety, so we were going to do somebody else.
We also write about it for, if you want some amusement, there's one chapter in there about the first legal brothel in America, the Mustang Ranch, and there are pretty hilarious issues about cash receipts and various women making $200,000 or $300,000 a year and not reporting the earnings. And so the fellow who ran the Mustang Ranch was convicted of tax evasion, and so they shut the ranch down, and then they put it up for auction, public auction. And this fellow buys back the Mustang Ranch under a dummy company. He operates it for a few years. The IRS doesn't know that it's still him running the Mustang Ranch. And then the feds figure it out, and they go after him again, and he flees the country. Today he lives comfortably in Brazil. He will not be prosecuted, and there's no extradition treaty with Brazil, and he's sitting on millions of dollars in revenue. Another case of the fish that got away. And the book is really kind of loaded with a lot of these stories of these kinds of folks, but that one is obviously, we actually interviewed some of the women, and it's pretty funny.
The IRS has a name for them, informal suppliers.
Is that right?
Yes.
That's great. Other questions? Yeah.
There must be some tax attorneys behind all of these, or many of these evasions, and I wonder if you could talk about some of the firms and some of the lawyers specifically that are mentioned in the book.
The question is what attorneys by name. One attorney that gets a lot of discussion is a fellow named Burton Cantor, based in Chicago, who basically helped the Pritzker family, helped a lot of very famous families avoid taxes for a number of years, helped the producer of One Flew Over the Cuckoo's Nest avoid taxes. We give all the examples of the kinds of clients this person had, and we actually did talk to him on the phone. He did consent to an interview, but the IRS has been tracking this guy, I believe, for 10 or 15 years at least. Or longer. Is Jerome Schneider a lawyer? I mean,
no,
I'm not sure what he is.
I don't think I don't think anyone is.
There's one fellow who's sort of an ex-con who is teaching people how to avoid their taxes.
He was pardoned, so I don't know if it's quite proper to call him an ex-con.
He's a pardoned ex-con or something. But we actually do list some of the attorneys. I think the one we spoke about the most in the book was Burton Cantor.
Right.
Is that right?
Yes. And he had he was one of the more inventive people. He was involved in an offshore bank in the 1970s I think it was in the, boy, it's embarrassing. I can't remember. It was in the Bahamas. It was the Castle Bank and Trust Company. And in the 80s, he was involved in setting up Cablevision and designing all these partnerships that allowed Charles Dolan, who's the founder of this company, and a lot of the investors through all these partnerships to actually lose money rather than make money from a very successful business. And there was a very long case. I think the initial IRS brief in it ran thousands of pages, and they had years and years of motions, and finally they go through the tax court trial process in which there's just a judge who hears the entire case, and he sat down to sift the evidence, and he took 5 years to render a decision after going through all of these records and all of this massive, and basically, and I'm not sure if it's going to be appealed or not, but basically found that Burton Cantor probably should have paid more taxes than he actually did.
And his opinion was 480 pages or something?
I think something like 600 pages, yeah. I mean, we looked at this case, and it's just mountains and mountains of paper, and that's just the filings. I mean, the normal tax court case, I mean, these are pretty complicated, involved cases. You may have like 2 or 3 of the, banker's boxes for legal documents. That was, I mean, the briefs of this was like the poor clerks at the U.S. tax court would wheel this thing out with back strain, and are you sure you want to look at all this? Well, this is the first set of papers, and so that was always a fascinating thing.
I mean, the challenge of writing this book, more than any other book the Center has written, was the writing of the book, because we're not accountants and we're not lawyers and we don't play them on television, and we thought it would be. No one wanted to read a legal brief. So you had to make this come alive. This is about people and the games, the things people do, basically, is what this book's about. It happens to be they're doing it with taxes. but we didn't want to write a book, an expose of the IRS. That wasn't the idea, and it wasn't an idea to tell you every in and out of the tax code. It was to show people and what they do and how they do it, and how the system works or doesn't work in a broad macro way, and the drafting and the redrafting and the redrafting and the redrafting of making it about people and making it approachable and accessible to the public was a big part of the process, more than our other work. Other questions? Yeah.
Some of these people, like Leona Helmsley and Mark Rich, are obviously household names by now. The other folks that you outed, did you find that they had no media coverage before, or very little, and the American public wasn't outraged, so it didn't blossom? Or did you, are you just totally outing people here that maybe from henceforth will get more coverage? I mean, in terms of these companies that might have shareholders, I'm wondering will there be a reaction?
That would be good if there's a reaction. If any of those companies are listening, no, I'm just kidding. In some cases, the companies had been, or the people had been written about. Like when Joe Ross fled Oklahoma, that was a story in Oklahoma, obviously. But a lot of these, I'm not sure. The answer is that some were publicized to some extent, some were not publicized at all, and we are outing them for the first time. Reporters don't generally congregate at U.S. tax court. They don't generally report on what's in those records. And one of the amazing achievements of Bill Allison and the team is that they basically lived in U.S. tax court for 2 or 3 years, which to me is pretty extraordinary by itself. And so I would say for the most part, we're outing people here. These are corporations that probably have never mentioned to their shareholders the games that they've been playing. They don't really want the public to know the extent to which they've done these things. They don't, Merrill Lynch does not want the world to know that they had an illegal scheme. Most of the Carnival cruise lines don't want you to know that they're actually registered offshore to avoid taxes in Liberia and the Bahamas. We name those firms. We tell you how much they saved in taxes. This is a giant pain in their backside, this book, and I'm hoping they enjoy it. Yeah.
So have you heard any reaction from people that you name in the book? You heard anything from Carnival Cruise Lines? Or
I've seen a few people who've ordered it on the front desk, but
Is that right?
yes, but I don't think I've heard directly from anyone.
When we released the book the other day at the National Press Club, we were shadowed by a tax advocacy group that felt that we were unfairly beating up on these poor folks. I mean, there's people out there that are doing all kinds of stuff there. And yeah, we have heard from, they weren't even in the book. I guess we should have put them in the book. But we actually haven't heard from any of the subjects of our stories. We have not heard from them. We did try to reach all of them, and we interviewed a number of them. There were hundreds of interviews altogether in this book. You know, I'm hoping we hear from them in the coming weeks. That would be an interesting conversation.
One final question.
Yeah.
Anyone? I have a comment.
Sure.
I suppose if you're offered free cruise tickets on Carnival, you might not want to go. Anyway, please join me in thanking Charles Lewis, Bill Allison. I recommend the book to you. Please recommend it to your friends. And of course, they'll both stick around, and I know would be happy to sign copies of your book, speak to you privately as well. Thank you.
Thank you. Do you want us to sign up or stand up? Has given us the National Award for Online Journalism for last year, and our book, The Buying of the President 2000, has just been named a finalist for Best Book in the U.S., which is the 5th straight year we've had a book as a finalist. So we do investigative reports and books that a lot of people in Washington would prefer that we never write. And we are nonpartisan. We alienate both parties equally. And we generally investigate and go into records that people generally don't look at, including journalists. And so that's the center. The thing that most shocked me about the book, in just some general broad strokes, first of all, I understood that we would find really wealthy folks and corporations that didn't pay taxes. I sort of had a hunch that that might happen based on our other work over the years. What I was startled by was how bad a problem it is. There are thousands of individuals and thousands of corporations that don't pay any taxes in this country. 1 out of every 6 corporations with 250 million assets or more pay 0 taxes every year in this country. You know, break into tears over the IRS here. No one likes the IRS or paying taxes. I understand that. But the enforcement staff at the IRS has been cut by 1/3. Prosecutions are down, are 1/2 what they were 20 years ago. Asset seizures are roughly 1/10 what they were 10 years ago. They went from 10,000 to about 150, roughly. It's worse than that, actually. It's much, much worse. And so what it means is that the IRS is outgunned. They don't really know how to deal with this problem. And we had an IRS lawyer who, for obvious reasons, asked to be not have us mention his name. He said, you know, if you go through thousands and thousands of pages and your court case takes years and years and years, why do you think we go after the little guys? They can't fight back, quote unquote. And that's what they do. And so this is a book about folks who have their own set of laws that they abide by that are different than most Americans. Most Americans, if they get a notice about being audited, quake in their boots and reach for the checkbook. And they don't want to get in trouble. I mean, and you're terrified, basically.
Good evening. I'm Marianne Brownlow. Welcome to Borders. This past week, probably like many of you, I had my income tax done, and afterwards, like most years, I felt like committing seppuku in front of the IRS. And then I perused The Cheating of America, and I felt like seppuku was possibly too mild a response. We're very pleased this evening to have as our guests Charles Lewis and Bill Allison. They are here to discuss their new book, The Cheating of America: How Tax Avoidance and Evasion by the Super Rich are costing the country billions and what you can do about it. That pretty well sums up the book, but I will say it is an incisive expose that fingers the fat cats and the permissive system that allows for their indiscretions. Charles Lewis is the founder and executive director of the Center for Public Integrity, which is a nonpartisan nonprofit that focuses on ethics and public service issues. Prior to that, he was an investigative reporter for ABC and CBS News and a producer for 60 Minutes. Bill Allison is a former researcher for the Philadelphia Inquirer, and he is the senior editor at the Center for Public Integrity. Please join me in welcoming Charles Lewis and Bill Allison.
Well, it's a great pleasure to be here, and Marianne, thank you. This is a real pleasure. I thought I would talk a little bit about the Center for Public Integrity briefly. This was a work that took 3 years and a dozen people digging through U.S. tax court records, which I wouldn't necessarily recommend for the faint of heart. And the idea was to do what we have done in over 100 reports in the last 10 years, look at what's going on in our democracy and what's really happening and who benefits and who doesn't benefit and how the system works, basically. And, I mean, we've never done anything about taxes. We don't have an agenda about taxes. So the Center for Public Integrity was started in 1990. It's a nonpartisan, nonprofit research organization that does investigative reporting, and I'm proud to announce today that investigative reporters and editors, we found that the biggest shock was not just the number of people, and by the way, we name names in this book. We tell you who they are and what they've been up to. This is all based on records that they would hope that you never see. But we then wanted to see, what's the government doing about this? What's the IRS doing about this, the Internal Revenue Service? Well, it turns out not much. We found that the kinder, gentler IRS that has been created in light of a lot of hearings and new laws and an independent commission that oversees them and things like that in the last couple of years. At the same time, over the last decade, we have gutted enforcement by the IRS. So what am I talking about? Well, if you owe more than $10 million to the IRS will take 10 or 20 years to come after you if they do at all, and on average they recover 17 cents on the dollar. Folks who have $10 million know this, and they have lawyers and accountants who help them do it, and a lot of the book is showing how this works. How badly has the IRS been gutted? And, you know, I'm not expecting anyone to